All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Thursday, December 22nd, 2022. Let's go ahead and get started with our day. Bottom right-hand corner of your screen, little black logo. Click on that. Turn notifications, subscribe to our channel. Make sure to hit that like button if you like these videos. Let's go ahead and get started on the day. Dow futures down about 228 after we got U.S. economic data dump. NASDAQ down about 1.26%. S&P down about 0.89% this morning. Russell down about 0.82. Dollar index is up, bouncing off that support level. Again, you can see that yellow line seems to be just holding and holding and knocking on the door. But again, we'll see if we get that break finally. Again, kind of just seeing that we're breaking, come back up, testing. Looks like we're just going to hang around there and possibly break. The longer we keep knocking on the door on the dollar, again, if you kind of want to see a little bit of a head and shoulders setup, at least on the 1 hour chart, again, I expect the dollar to roll over a little bit more and finally get us to where we need to go towards 100. Let's take a look at the volatility index. Interesting enough that stocks, S&P 500 yesterday was right around, what, 3,900 or so? The volatility index was near a 19 handle, right at 20. So 20 usually means low fear, yet the market isn't as high as we expected. So again, you can see we have a gap up here on the 1 hour. We have a gap down here on the 1 hour. So it really is pick your direction at this point. 10-year yields are red this morning, 3.682. There is a gap up, two of them here, two gaps to fill on 10-year treasury yields. We finally filled this gap here, 36.94, at least on the 1 hour. If we could retest below 3.5%, that should be nice for the stock market. Crude oil is up about 1.11%, right around $79 a barrel. Starting to get a little bit of a pop, which is nice. Let's go ahead and expand the chart. We'll go to a daily 2-year. And again, remember this yellow line is where our support was, around 75 a barrel. Really key resistance here is around 84, 82. Again, I like energy stocks, don't get me wrong. Like them for next year. They actually soared this year. But again, this yellow line here, 84.79, 85. We still kind of been consolidating right around 81 to around 73, about a $10 range really since mid-November. So again, not a lot of edge there to trade it unless you're really scalping it. In terms of gasoline, up 1.32%. That's $2.29 a barrel. 18.18 for gold futures, down 0.39%. Silver futures, 23.79. That's down 1.63%. Again, dollar being up slightly. Let's take a look at euro dollar, 106.12. Let's go ahead and take a look at that. Again, that's been kind of our proxy for the S&P 500 if the euro is up and the dollar is down. Again, you can see that trend line. We're still above it, but we still want to get around 107.81, which is this June resistance. We need to break that so we can go a little higher, March headed to 111 or so. Pound dollar, 120.31. That's down 49 pips. A dollar yen, flat, even though it's been volatile the last couple of days, obviously with the BOJ. Bitcoin futures, 16,735. Ethereum, 1207 each on the futures side. We had some earnings yesterday. I think we had Micron yesterday. They missed on estimates. They are down this morning at 49.34, pre-market from a close of 51.19. We did take Boeing yesterday. Well done, team. We also had another trade. I think we had Boeing, and let me make sure I had the other one. We had Boeing and IWM. IWM yesterday we reported or we talked about. Good thing we took it because now it would be below the money. We had 175 calls. We hit as high as 177.49. I took it for 35%. Boeing, we got as high as 39%. I took that as well. You can see this gap fill at 106.07, 196.07. That continue higher. So again, a very, very quiet week in terms of the market. We only have 3 trades that we took this week. Again, it's important to just be prudent. Again, look at this action. Let's go ahead and take a look at the S&P 500. Really have all we've been doing is really trading in a big, like frustrating range. You could see pretty much from around 4,000 to around 3,800. We've been kind of stuck here for the most part. Again, pretty much the same level we've been since October 24th. Again, the yellow lines are your retracement from the peak post CPI to the low of 35.02. And again, you could see that we're still above the 50% retracement, which is nice. Again, we want to hold above 38.40. Would like to see us get above 3,900. But the key level, guys, if you want to go long, is 39.20. if you wanted to go ahead and see if we can retest some lows, 38.40 for the short term, and then you could target 37.41 or 3800. May not be the best as volume is sinking. You could see really since that CPI number, volumes have been dropping pretty consistently. So it's a little difficult to trade this tape. You may want to just buy some time for next week. And even next week, you have a short week. If you're playing for next week, more likely you're playing for a Santa rally, again, which starts on Friday. That's historically speaking. I went ahead and talked about that on Twitter. Here are the data dump. Here we had the GDP number. So first I want to show you this because I use Forex Factory. And Forex Factory released its core PCE number, which was interesting. Let's see. This is Thursday. This is December 22nd. Let me see if I can get this week. Okay, apply settings. Here we go. Okay, so Thursday. So tomorrow is Friday. We have core PCE month over month price index. I don't know why that was reported today when it should have been tomorrow. And Forex Factory is pretty good at this. But we had the final GDP number today. So let's take a look at it. GDP number Q3, 3.2%. That's a beat of 2.9%. Consumption, 2.3%, estimated 1.7%. GDP price index, 4.4%, estimated 4.3. Let me see. Retweet that. And then the core PCE number came in at 4.7%, estimated at 4.6. So again, that was higher than estimates. I think that's the number where the market was looking at. This is what the Fed looks at. And again, that would probably lead to more rate hikes. Again, we still think that in February 1st or first week of February, 25 basis point is basically baked in. It could be a 50, but we expect a 25. There is no rate hike or rate decision in January. So that's it for in terms of the Fed with you going forward. But again, looking at this data, GDP is still strong, even with inflation kind of creeping down. But again, demand is not destroyed, at least so far. Personal consumption, we could see that demand is still not destroyed, no matter what the Fed is doing right now. But again, the PCE numbers, this is including rent, again, is still above estimates. And it's all about expectations and perspective. That is down from last core PCE. But again, we're not falling fast enough in terms of the Fed. And that's what really matters. Can the Fed see that we are actually falling to a point where, hey, you know, I believe inflation has peaked since June. But again, it's really up to them and see where we go from there. So that's pretty much the thesis of this week, guys. It's not a short week. It's a short week next week. We know that tomorrow is the day before Christmas Eve. So again, I don't expect a ton of action. The most important thing is to watch your levels, hawk your trades if you have any open, and just kind of wait for an opportunity. It's okay to just wait and to see. Cash is a position. So we will see what we get moving forward. I will catch you guys tomorrow for the morning note. Most of you guys are probably on vacation right now. Kids are probably home from school. So all good. Again, nothing really to look at this moment. Really just some choppy action. If you're looking at S&P 500 futures, again, 3920, we need that break. Get above 3900 first. But again, if we do break below 3840, which is that 50% retracement on the short end of the S&P 500 futures, then we could possibly see 3800 or 38,781. For all we know, we could be chopping between those levels, but at least until then, we will take a look moving forward. Amazon, let's take a look at it. Tesla's still underperforming as well. I still like Tesla. It is down pre-market. I do want to short it to 130, but again, probably have to buy some puts for next week if that's the case. In terms of Amazon, you could see here around 87.11 rejection. We do have resistance at 88.48, at least in the short term. But again, it's such a big part of the NASDAQ. You could see down 1.20%. It's going to roll over too if it stays that way. Right around 84.58 is your support. We could place an alert there. And if in terms of resistance, you're really looking around 88.32 with the 200 MA right there. If we bring up the 2-year daily, you can see pretty ugly. You need to get below 84.58 before we start seeing some additional weakness. Where would the additional weakness level come from? Well, I have to spread out. I have to go ahead and expand a little bit more. But if we get back to the COVID lows, that's 67.53. But again, you got to hold this level here about 84.52. I have 2 levels. Let me go ahead and close one. 84, I'll close that. 84.58, that's your key support. If that does break down, then we're already taking a look at the 80 calls, 80 puts to short Amazon. Amazon does not look very pretty right now. So again, possibly some opportunities to short this name. This really depends. Really depends on what happens moving forward. But right now, futures are red currently. So we'll see moving forward. Thank you for the question, DM. We'll catch you guys tomorrow. Have a great rest of your morning, and I will see you tomorrow for the morning note. Cheers, guys.